It's not who can build, it's who knows what to build. It's the one that's going to have the customer adoption, high switching costs, and trust. A lot of where we've seen success with our companies are founders that have that trust with the customers that they're selling to because they are one of them. And so I think that's going to become more of a moat. It's also a barrier to entry, but if you are a founder that has those, it's going to be your best competitive advantage.
Welcome to the Inside the Fund podcast, where we go on the other side of the table and learn about capital raising from VCs. I'm Helena Fogarty. I'm a fundraising expert who helps startups raise their seed and Series A rounds. Today, I'm speaking with Maddi Holman of Daring Ventures. Daring Ventures is a pre-seed VC firm backing buyer builders, creating software for industries that they already understand but didn't have the tools before to do it themselves. Maddi co-founded Daring Ventures in 2024 with Joseph Alalu after building extensive experience across the venture ecosystem. She spent close to a decade in corporate VC, working at Touchdown Ventures across T-Mobile Ventures, Allegiant Ventures, and Olympus, and then at Cigna Ventures in healthcare. She has an ability to spot unique talent before others see it, which led her to join forces with Joe to start a new VC firm. She also hosts Let's Be Heard, a women's health podcast. Maddi, thank you so much for coming in today.
Thank you for having me. Excited to be here.
Yes, absolutely. I'm so excited to chat with you about your emerging fund and your podcast, which I just want to highlight for a second because you're shining a light on women's health issues that largely go kind of minimized, let's say.
Yeah, it's from my own experience in healthcare and not being heard a lot of the times, and then also trying to advocate for it on social media. And a lot of my posts would get banned because I would use it,
you use the word female
anatomy terms like vagina, and it would get reduced. And so I couldn't spread that word. And I know how hard it is to understand our own bodies. And so I wanted to create a safe space where we can talk about it with founders that are building incredible services and products for women, and then thought leaders, providers who can share about their expertise in learning more about our bodies. And so that's really the genesis of it. And I kicked it off in May last year.
Yeah, and it's great. Everyone should listen to it because I mean, if you're a woman, I think everyone should listen to it. It's just, it's ridiculous. And I guess I always say, my intersection of passions is getting founders funded, founders mental health. But now I think I have to add to that, women's health.
Oh, yeah. Women's health is everyone's health, if you think about it. I mean, we all come from a woman.
Yes.
So we all have a mother, a sister, a daughter, a cousin, a friend, and we wouldn't want them to be going through life without having all the tools to make them feel the best. And so that's something where I'm constantly learning. And even having doctors as parents, I still was in the dark of a lot of my, what my body is doing and about myself. And so it's been really exciting to talk with people who are immersed in this space and so passionate about it.
Yeah, I love it. I have had the opportunity, because my husband is a Spanish speaker and from another country, to go to many of his doctor's appointments with him. And it's insane, the difference.
Yeah.
The different treatment that he gets.
Oh, yeah.
Versus what I get.
Yeah.
And I come armed with data. I come armed with knowledge and advocacy, and still a lot of times I'm getting dismissed or offered things that don't have anything to do with what I'm talking about. And he goes in there, he says one thing, he's like, oh yeah, here's a pain pill for back pain. Sure.
Oh yeah. That's the same thing I've been learning with some of my siblings, and their friends are having children for the first time. And so I've become an aunt to a niece and nephew, and it's interesting to see kind of the after birthing process where women are recovering. There's a lot of, you still have to pump to, feed your baby, and you have to manage to take care of yourself, but you're not really given a lot. You kind of just are thrown into having to do it versus some experiences I've heard with vasectomies. It's a small procedure, very much less traumatic than birth. And they're usually given strong medicine and say, lie down for a week.
Yeah.
So it's interesting to kind of see where that is pervasive across healthcare. And I think there's definitely, progress, which is happening, which is nice. But I think we've got so much more to go.
Yeah, and we'll get back on topic in a second, but I just had a major surgery in the end of November, and I was sent home. I was told I was going to be sent home with some narcotics. I was not, even though I triple checked. But luckily, my husband had some benzos from his back pain, which is ridiculous that I needed to go looking for something that I was not being offered.
Yeah.
For mild back pain.
Yeah, and that's something I've heard consistently from women who are either starting companies that are helping support that with pain management.
Yeah, it's wild. Anyway, but we're here to talk. I just got on my soapbox. We're here to talk more about you and what you're building with Daring Ventures. So I'd love to go back to your origin story and hear a little bit more about you and how you got into VC.
Yeah, it's definitely not a path that I was expecting to go on. I was actually very much a biology nerd. I thought I was going to go into medicine like my parents. I was pre-med all the way through college. I went to school down at Rice and really thought that's what I was going to do. But then my junior year, I shadowed some doctors in the med center and realized that actually delivering care was not what I wanted to do. Mm-hmm. I love learning about it. I love learning about different innovations and, what we thought we knew 10 years ago is different now. And that was a huge insight. And I decided I'm not going to go to med school. I'm still going to finish my degree in biology because I do like it, but really had to figure out what I wanted to do next and what I was actually passionate about. So I decided to go to business school in London at Imperial College and just get a foundation in business, entrepreneurship, trying to see what other careers are out there. Mm-hmm. And there was a course on growth, finance and venture capital. And that was kind of my first exposure to it. That's and cool. I loved it. I mean, being at that intersection of supporting founders, learning about new industries, and getting to try to support them and underwrite deals seemed really interesting to me. I love the component of you're constantly learning and you're constantly engaging with people. Mm-hmm. And so that was kind of my first realization. I was like, this is what I want to do. Took a little while to get into venture. I didn't have the typical background. I was a biology major, not finance, had no startup experience. And I eventually got in on the corporate venture capital side with Touchdown Ventures. And it was incredible. I love learning about VC as well as strategic alignment with corporations. And I knew I was on the right path and that's what I wanted to do. And so that was, I've been in it for close to a decade. And then I met my co-GP for Daring Ventures when I was based in LA working for Cigna Ventures. And he went to one of the investor happy hour meetups. And when I connected with him, he told me about his backstory, which was very unconventional getting into finance. Mm-hmm. And we just really bonded over our shared values, how we thought about the world. And so we stayed in touch. And he continued to start building Daring Ventures. And so a little bit on his background, he didn't go to college straight away. Mm-hmm. He was actually flunked out of community college 3 times, washed cars at Enterprise, and really didn't know what he wanted to do. But eventually came across investment banking, was like, that's my path. That's what I want to do.
Incredible, right?
Yeah.
Very cool.
And he was also very determined, like me, getting into venture. And a lot of people, wrote him off, said, no, based on your background, that's not for you. Like, that's a cute dream.
Yeah.
And he said, I'm going to do it anyway. And so, 4 times the charm in community college, transferred to Columbia, and then got into Lazard doing M&A for aerospace and defense.
Wild.
Yeah. And one of the things that really led him to venture was on the side when he'd have his day off from work, he would do this mentorship program called Wall Street After Community College, where he would help community college students go from their associate's degree to their first job on Wall Street, get a 100% placement rate, and realize what he really loved doing was underwriting talent. Mm-hmm. And so the best way to do that is at the earliest stages with venture. And so that was something I was already doing in venture and, finding great founders to back. And so that was kind of the genesis of
That's really cool.
Starting something new.
Yeah, I love you sharing that. I mean, it is hard to get into. And I think a lot of what we're going to talk about is like building your own firm and what that's like. And there's so many things that are similar to building a startup.
Yeah.
In that. How did you know that you were ready to join Daring? and leave the corporate VC world? Leave the check, leave the paycheck.
Yeah. It was a little bit scary, not going to lie. I definitely had to weigh the pros and cons of it. And really, what really drove it for me was I was more excited thinking about Daring Ventures, trying to help Joe think through the thesis than my day job.
Yeah.
And so I just realized, I think I've learned as much as I can in this position, and I'm in a good enough position financially to have a year to be able to do this and see, can we build this? And so if it's not now, I don't know if I ever would. And so that's what made me take the leap and put in my notice and join Joe starting Daring Ventures, which I will say is probably one of the scariest decisions I've ever made. I also didn't tell my family that I was doing it, and they found out by LinkedIn changing my my status of my job to former Cigna Ventures. But it's been a great experience so far.
It's nice to know that your family follows you on LinkedIn. Everyone should follow you and Joe. I think your posts are really, really funny. It's kind of like American Psycho combined with startups.
Oh, yeah. You got to laugh at yourself a little bit.
It's amazing. So what has been different working on Daring Ventures than working at corporate VC?
Yeah, there's definitely a lot of things different with it. I would say the biggest thing is flexibility and a little bit more unstructured than corporate VC. We would usually have direction from the corporate partner on strategic initiatives, what they wanted the investments to go towards. And so didn't really have a lot of flexibility in that regard. And you also had the balance sheet, which is most of CVCs will be investing from there through a fund. Yeah. And so you don't ever have to raise outside capital. But with Daring, we had to start from scratch. We had no infrastructure. We had literally just a piece of paper that said Daring Ventures and, entity formation, and had to slowly build things together. So it was a lot of months where it felt like, what are we doing? Going into the office, trying to will it into existence. And, at some point it just kind of flips. And then you're like, oh, wow, okay, things are starting to come together. So I would say that's kind of the biggest learning, is trying to figure out how to put it all together. Mm-hmm. And then figuring out your voice. I think that's another thing. We each have our own personal brands, but how does that blend together to make Daring Ventures?
Yeah. And you mentioned before we started rolling that before starting or while starting the fund, mm-hmm. you started angel investing and maybe doing some SPVs. Was that?
So yeah, we started doing angel investing mainly through our own check sizes. So not in an SPV, but really just our own capital, putting it to work and showing our thesis in action. Yeah. And while we did that as well, we built up the infrastructure, fund ops, fund service providers, banking, legal. And we wanted to make sure all of those tools were basically turnkey by the time we started fundraising. So we already were basically running a fund just with our own money first, mm-hmm. learning all the mistakes, with our money and not LPs. Yeah. And then made some angel investments to show we can find great talent. We can get into deals that are hard to get into. And we're that first person that a founder calls or texts, good, bad, anything in between, mm-hmm. Will be there for them. And so that was an exciting part, to just be able to show that we could provide value to founders and that they chose us. And so that's been really rewarding. And it's definitely helped with when we started fundraising a couple months ago.
Uh-huh. Can you tell me more about your fundraising?
Yeah.
How's it going?
Fundraising is always one of those questions everyone always asks, how's it going? Yeah. It's always hard. I think if anyone could do it, then everyone would have a fund. And so it's one of those humbling experiences. I will say, through this process, I feel so much empathy, even more so than when I was just in VC, for founders raising. Yeah. Because we get the same thing of, oh, come back when you have a lead. Yeah. That's the same thing. Oh, come back when you've had a first close. And so it's really refining your story and being very direct in how you ask people about investing. At first, it seemed a little bit too salesy or it might turn people off. But I realized it was actually more beneficial for them to just ask straight up versus wasting time trying to beat around the bush. And so we've learned over time which LPs are fund one LPs and which ones are maybe later when we have a larger fund. And so it's been interesting to see. It took us a couple months to get our first LP, which actually was another Rice athlete who now plays abroad professionally. And it was the best thing, honestly, when we got that. It was like, oh my gosh, this is amazing. And then the second thought immediately after was, oh my God, this is so hard. It was like, oh my gosh, and so it was like, okay, how do you keep a process going and keep that momentum? And also just building up, the highs and the lows. How do you sustain yourself? And so we finally got to a point where in the beginning, it was a little bit more chaotic spray and pray when we were trying to target people. And now we've refined that to a few different types. So we actually are targeting, former and professional athletes. That angle with playing undergrad resonates a lot. And a lot of athletes are looking to do stuff beyond just their sport. And then the other one is fractional service providers have actually been a surprising funnel for LPs because they are looking for companies to work with. And then with you're partnered with a fund, you become that preferred partner and kind of get that stamp of approval. And so
that's amazing.
That's been exciting to see.
That's very cool. Yeah, I feel like when I got my first big check for a company, there was this moment of like, oh my God. And then the responsibility hit me.
Yeah.
And I imagine it's similar because, you're like, oh my gosh, this is amazing. This is so great. We did part of it. And then it's like, I've got to make smart decisions.
Yeah. It's interesting when you first think about like going into it. I remember saying, okay, we're going to raise a fund. It's going to be awesome. Like we're just going to, fundraising is the hardest part. I would agree with you. I think after you actually get a yes, you get a commitment, it hits you a lot more. The weight of the responsibility of managing other people's money, asking them to trust you, to be able to do the best job to your capabilities, and having to realize, okay, it's not just my money. If I mess up, make mistakes, it's, I'll probably not like that I did that and kick myself for, but it's just me. But when it's other people's money, it's like, okay, we have to have processes in place. We have to make sure this is institutional, structure for the fund because we want to make sure that we do the best for our LPs and get them the returns that we're promising them.
Yeah, absolutely. And so is there like a whole network of D1 athletes out there?
There's a handful of different groups. There's a couple with in New York that I've actually gotten to know. There's one called The Post, which is also professional athletes too, and former professional athletes. They're like community hubs. They've got a office space. They do events, just, getting people together.
That's cool.
And then there's one called Launch Break, which is a female-focused one. And that one's all virtual, but it's across the U.S., but they have a decent amount in New York. And I've met up with a couple of people who are in that community. And so it's been cool to see. There's just a different bond, from that competitive mentality and also the grind that you've been through and having to deal with adversity and just not doing great and having to kind of push through that. And so it's been cool to see other people doing incredible things that have come from athletics.
Yeah, that's very cool. I put together a silly tool that I never released, haven't released yet, that was talking about what are some key things that help identify you as investable for VCs. And D1 athlete or professional athlete was one of those things on there. And it's my little tool that has not was in jest. It's a little bit of a joke, but there is something to be said for that because there is a competitive spirit. Like there is like, that these people are competitive and know how to work.
Yeah.
You know? And there's probably a whole lot of other characteristics that go with that I can't name off the top of my head. But it's really interesting.
Yeah, no, it's definitely something that's been touched on with LPs that we've talked to. And essentially, too, especially D1 athletics, a lot of people don't realize how much of a job it actually is. Yeah. And so it's not just, doing sports and then school, but it's learning how to manage your whole schedule and having to hit these performance marks for your team. And so it does definitely instill that component of it as well, which I think is helpful for LP reporting and maintaining relationships with them.
What is it like to emerge from being an athlete like that? I mean, I was an athlete. I still work out often, but I wasn't D1 and I didn't play. I walked on to my soccer team in college and then I decided I did not want that life.
Mm-hmm.
I wasn't going to be I wasn't recruited. I wasn't first string. Like I was going to be a bench warmer. And I decided that was not how I wanted my college experience to go. So I imagine having 4 years of that.
Mm-hmm.
And then going to maybe London, or I don't know if you had work in between there. Like, what is it like to step down out of that?
Yeah, it's a good question. It's one where a lot of people ask me when they hear that I've been an athlete. They say, "Oh, do you still play volleyball?"
Mm-hmm.
And I say no. I love it dearly. I love watching it. And it was a great experience. I would never change anything, but it was a time and place. And I still love staying active and doing other things like lifting and, workout classes. But it's the drive and the discipline and the ambition that continues to, roll over into other aspects of my life and career. And so that was something that I continued to leverage, especially as I was getting into VC. I wanted to be the best, and like I would just grind and grind until I figured it out. And one of the things when you're junior in VC is really building up those reps, starting to see like, can you pick good companies? Can you analyze and understand an industry super well? And so that was something that the competitive nature in me and just wanting to learn it all and be fluent enough in it to understand it and ask thoughtful questions was super helpful.
Yeah. I just use the term building reps with my daughter, who's an athlete, who's 14. Then I had to explain what that meant. That's what that we use often, I think. Can you compare being in corporate VC to being in charge?
Yeah, it's a lot more strategic work and thinking about relationship management and thinking about 5 to 10 years ahead versus when you're part of a team and part of a corporation that's been around for a while, that you're really just a cog in a wheel.
Yeah.
And so you're limited in what you can do. There's definitely a lot of benefits to being so close to like the senior leadership at Cigna, for instance, and being able to tap into their expertise and learn how to speak to them and, develop an understanding of corporate politics and relationship management. That I would say definitely transferred over to running my own fund and having to navigate those conversations with like LPs or other VCs that are in our network that we connect with. But I would say there's a lot more pressure being, owning your own firm and also co-owning it, because I always want to make sure that I'm pulling my weight and that I don't want to let my partner down. And so there's a lot more pressure on that regard of like, okay, how are we going to actually shape this firm? How are we going to make it successful? And any mistakes or, things that go wrong, it's on you. And so just having to deal with that and be okay with making mistakes and learning from it and having it be higher stakes versus if you're part of a CVC team that's in a larger corporation.
Mm-hmm. And in terms of speed, corporate VC has sometimes a bad rap of being slow and expensive.
Yes, I would definitely say that's pretty consistent across CVC. There's some that go faster because they function more like a traditional VC firm that's focused more on financial outcomes rather than strategic.
Yeah.
But for the ones that are strategic, it can be a grind to get through a deal. I would say usually it would take like 3 to 4 months to be able to get through diligence and make an investment versus we can do it in 2 weeks or 3 weeks if we need to.
Yeah.
And I would also say for corporate venture capital, I would always tell startups to start building a relationship early, because that whole process is going to take a lot longer than when you're starting to, kick off fundraising. And so just really understand kind of the dynamics and what is expected, because a lot of times corporates want to see more traction before they would do like a pilot or an investment. And so that is definitely something that's very different than us. We go in very early. We're post-product, but can be pre-revenue for companies. And so we love getting in early. We even want to talk to companies that are maybe at like angel stage or idea stage to start building that relationship. And we can navigate the uncertainty or ambiguity of that stage.
Okay. That's excellent. I love that contrast. And what kind of opportunities make you excited? We talked a little bit about the thesis. Tell me more.
Yes. So I am really excited about boring industries, ones that don't really get the flash in the news. Really, a lot of the workflows, the processes that really power our economy that are behind the scenes that you really don't know are there unless something goes wrong. Like a big example was supply chain during COVID, when you would go to the grocery store and half the aisles were still not stocked. That's something that we take for granted when it's just going well. And so I love those types of industries, the ones where it's, for example, one that we've looked at is in like water infrastructure space, like looking at how AI video analysis of water pipes is helping to understand maintenance and whether or not pipes need to be replaced or if they're lasting. And that's, within cities and then also in rural areas. And so that's something that I knew existed, but not to that level of like, wow, there's actually a lot of work that goes into this process. And then other things like energy management in commercial buildings. There's a lot of different types of energy sources, and not a lot of the times it's managed the most efficiently and usually can be fragmented, disjointed. And so being able to centralize all of that and then be able to make it so that you're able to control and optimize your energy usage in the building is another one that we look at. So we love those types of industries that are very people, process, or paper heavy, where there's nuance to the industries, and some friction is good friction, some friction is bad friction, and knowing which parts to innovate on.
Yeah, there's so much in our world in the U.S. that we don't, like most of us, operate without any knowledge about.
Yeah.
Like when I lived in Costa Rica, if you bought a lot, you had to make sure that you had water rights and electricity, like, there were lines being already run in that street that could be run to your house.
Yep.
I never, living in New York, I never thought about that.
Oh, yeah.
And it's a huge deal.
It is. Yeah.
The infrastructure. And so there are things out there in our world that, if we're just going to work and getting coffee and coming home, like we just don't even think about.
Oh, yeah.
That are huge economic opportunities. So, cameras looking at maintenance of water pipes.
Yeah, it may not be a page turner or, front news on TechCrunch, but, when you look at the market opportunity and how much we depend on it, there's a lot of opportunity there.
Yeah. So how do you go from not knowing anything about these things to becoming good enough or knowledgeable enough to make a bet?
Yeah, I would say asking a lot of questions is a big piece of it, being very curious. One of the great things about learning new industries is you often start to see similarities or at least patterns that are transferable from different industries, and that helps you understand it faster. But I would also say doing a lot of research as well, just trying to understand the market. A key thing is like, who are the internal stakeholders in those markets? How do they work? And doing a lot of reference calls as well. Like we'll talk with people who are, thought leaders or industry experts to understand, is this actually a pain point for you or a nice to have? Because if it's a nice to have, then it's not going to be something where if, the market changes and people are tightening their budgets, that they're going to spend money on. And so we do that a lot to try to get comfortable with the market. And oftentimes the founders that we back are buyers themselves. They're the ones that have been in those industries and have lived experience. So they know it super well and know their customers. And so that's also another source where we can test and see how well do they actually understand their market, and have they thought about all the different potential pitfalls, tailwinds, and seeing how attractive this market could be. And one of the other things that's been great with my CVC background is, even though I've transitioned to traditional VC, I still try to maintain a strong network of corporate venture capital firms, so that I can then reach out and say, hey, have you looked at anything in this space? Like, is this something that you guys are dealing with, or your corporate partner is dealing with, and would this be of interest? So that's also another nice angle that we have access to.
Yeah, when you start talking about reaching out to, stakeholders, reaching out, doing reference checks, like my head just starts, going through, like, what does that look like, right?
Yeah.
Are you cold calling and cold messaging people? Maybe in some case, but you've got a strong network that you're also relying on.
Yeah, it's a bit of both. I would say definitely a strong network from the CVCs. That's kind of the initial point I would start with. But honestly, I actually do a lot of cold outreach. A lot of people love talking about what they're passionate about or what they do. If you're not asking them for something in terms of like that would take time of their day to do something, that they don't want to do, probably not going to get a lot of responses. Like LP asking, reaching out cold, be like, hey, do you want to invest in this fund? Taking money away from them and putting it into something else. But if you're asking just like 15, 20 minutes, can I pick your brain on your job and what are your pain points, and share this opportunity, and seeing if that would be something of interest if it was commercially available. There's actually a lot of people who will answer and respond, and so that's nice to hear. So I always am a big fan of cold outreach.
Yeah, that's great. And when you do cold outreach, tell me about your hit rate. Like, are you reaching out to 5 people expecting to speak with one? You're reaching out to one person expecting to talk to one? Like, this is something I talk with founders all the time. It's like, people are human. They have their own lives. They have a lot of stuff going on. So we have to right size the outreach.
Absolutely. I would say more is better, because then you have hit rate usually is pretty low. So don't get discouraged if you don't hear back. And even following up with people multiple times, like I've done that for outreach for fundraising. I've hit someone up 3 times and then eventually they respond. And, as you said, people are busy. LinkedIn is one of many inputs and, notifications people get every day. And so it's a lot of stimulation. So, sometimes it's hard to keep track of everything and respond to everyone. And so I would say try to do more than you expect. And then you'll probably get a hit rate of like 10 to 20%. And so that's something I would suggest. Also, if you ever do it on LinkedIn, don't use InMail. I would use the connection request and then add a note, because then you can use a 300 character limit. And that way people like connecting. And so even if they don't respond to your message, but they connect with you, now you have them in your DMs, where then you can actually type a longer message versus InMail. Most people equates it with spam now. So that's kind of a trick that I use.
Nice. I love that. Love the inside tips, I guess. How do you think you evaluate founders now versus when you're first starting out?
Yeah, I would say when I first started out, I was very much check the box. Like, these are the criteria that they need to have. And I was a little bit more like black and white in terms of like how I was thinking. But now I'm a lot more flexible and really asking questions that make sense for that founder, for that industry, and the problem that they're solving, because every founder is going to be a little bit different and the problem that they're solving. And so certain things are going to be more important to ask about. Like, for instance, if they've got deep experience in, let's say, healthcare, and they're building something in women's health, how are they on like the technical side? How well are they on the go-to-market side? Like, what's their strength? And then how are they mitigating or bringing on other people to help support them as they grow? Like, what is their superpower? And, that's going to be different for other people. And then asking about customer connections. How well do they know their customer? Have they done customer discovery? What are the different nuances of those industries that they're working with? So it's really dependent on the type of founder in their industry. I've learned to not just copy and paste and ask the same questions to the same founder, because that's not going to get you enough information to have a well-rounded view of who they are to make a decision if you're just asking limited questions that may not be as relevant to them in their particular field.
Yeah. I was speaking with another investor last Monday, and she's been doing this for about 15 years. And she said that when she started, she fell in love with every company. And then she became cynical and was very not in love with any company. And now she's been doing this so long that she has to kind of be more optimistic than she's trained herself to be in the past.
Yeah, I could definitely see that. I tend to be, out of the two of us on our team, the more the tougher diligence question person out of the two. My co-GP is very much falls in love with a lot of the startups, really good at finding the good and the potential in them. And then I'm always the one that I see that too, but I tend to focus more on, okay, what could kill the deal?
Yeah.
Because we see so many companies and we have to be, time is a scarce resource, unfortunately. And so have to get there quick. And so I tend to be like, okay, what are the things that could go wrong here? How do we get to the fastest decision? And also, benefit for founders too, because we don't want to be in this maybe limbo, for such a long time. And so trying to be respectful of their time too.
Yeah. I tell people when they're fundraising, and this could be good or bad advice, but basically if someone's not ready to move forward at the same rate you are, it's a no for now. You can circle back to them when you have most around and maybe they'll be ready to go. But for now, just put them in the no column.
Yeah, I agree with that.
Because you can't wait around for everyone to get to conviction. And again, funds have their own timelines.
Yep.
They have their own things going on.
Oh, yeah.
Yeah. So it's not always, they're not going to move at the same rate all the time. What's the biggest lesson you've learned along the way, the hard way?
Yeah, I would say hiring has been the hardest. We tried to hire for a more junior person, like a jack of all trades, to help support Joe and I, just because so much to do, and only so much that each of us can handle. And so we learned that it's hard to find the right criteria, like how do you create a job description and ask the right questions for the types of skills that you want. For instance, when we would type, want a job posting that was chief of staff / head of operations / investment associate, literally all of that. A lot of the times you'll get people who just want the investment associate part. They just want to get inventor and that's all they want to do, but they do not want to do any of the operational heavy lift, the admin stuff. I mean, so trying to figure that out was challenging, and asking different questions like, what's your favorite book or what's your hottest take in VC, to kind of get a better understanding of the candidates. And I would say we've tried twice to hire. Both didn't really work out well. I think it's a lot tougher than we initially anticipated. And I think you need to have the right mentality of someone who really loves kind of the startup environment, who understands that the pay is going to be a little bit less, but there's upside on, carry or, future roles as we raise fund 2 and fund 3. And that just was not really resonant. I think a lot of people we interviewed, and some that we did hire and then had to let go, it just, that realization of what you actually have to do versus the idea of it was, there was a disconnect. And so that's something we learned the hard way, that, okay, if we do hire, we got to make sure we vet thoroughly, maybe do like an internship, or we do some type of collaboration and kind of the try before you buy, see if it's a good fit.
Yep.
And then if it's not, be able to make that decision faster. I think there was a couple where we didn't do that fast enough. And then it, we could have saved so much time and resources and money on it. And so I would say that's the biggest lesson we learned.
Yeah. And that's, when it's not working out, that's uncomfortable for everybody.
Yeah.
Yeah.
Yeah. And no one likes to have that conversation, but to your point, it's really not a benefit to them either if you continue to have that working environment where it's just no one's happy and feels like they're in a place to be empowered.
Yeah. How do you think founders should be thinking about valuation right now?
It's an interesting question. I would say valuation, just from the beginning, is more of an art versus a science. Just to set that framing. It's even for us, we try to navigate and figure out how do we value companies at our stage because we are so early. I would say don't rely on just SF or New York valuations, because a lot of times you have to look at what are the dynamics in those ecosystems. There's a ton of investors, a lot of competition trying to fight for a small amount of companies that are based in those areas. So the valuations are going to go insanely high. I would also say there's a lot of mega funds, which I would say aren't really venture anymore. I would call them more asset managers at this point, given how much AUM they have. Yeah. But that also distorts valuations, because typically when you're doing valuations at a true pre-seed or seed stage, you're underwriting to a 10x multiple at least. And for these mega funds, they're underwriting to 2 or 3x. Yeah. And they need to just dump a bunch of money. And so I would say it's actually a disservice to founders. So my advice is see how much money you need to raise and add a valuation where you feel confident that you can hit those milestones that you need the raise for, and then could then have a step up for your next round. Because you constantly want to have, anytime you need to raise another round, you want it to be a step up. And so you want it to be something you can grow into. And so that's something I always try to tell founders. Don't always go for the highest valuation that you can, even though it may look enticing and there may be a great, brand name VC that's providing that term sheet. Make sure it's a good fit for you, because there's a lot of times I've seen founders get burned by it where they either have to do a flat round, a down round, and it dilutes them further.
Yeah, absolutely. So step up for pre-seed to seed. Is that 3x? Is that generally?
Yeah, I would say usually anywhere between 3x and 4x. I would say and one of the things that we've looked at too, because we don't just focus on the coast, we'll look at deals, and we have some deals that we've done across
You don't
the US.
Just focus on the coast?
We don't.
That's
no.
amazing.
Yeah,
That's
we actually went to 13 states last year, if you could believe it or not. And the dynamics are very different. Yeah. You actually have more favorable terms. They actually use convertible notes still rather than safes. And so you kind of have to balance the views of valuation on the coast and then in non-coastal areas and see where does it make sense. So we've seen anything from a $300K pre-seed on a $6 million post, and the company already has $50K in MRR. And then you see ones on the coast that could be maybe they have an MVP, they've got some potential pilots about to be on board, and they're raising a $2 million at a $10 million post. So that's typically what we've seen at pre-seed. I would say anything above 15 million we wouldn't do it. We just think it's too rich. But we also wouldn't want something super low, which as an investor would be great, but for founders, it dilutes them too much in later rounds, so it does a disservice to them. Yeah. And step-ups, usually what we've seen has been 3 to 4 when you get to the seed stage.
Yeah. I've seen some first-time founders who are going out there, and when I see how much they're raising, the valuation cap that they're looking at, I'm like, you're sending a signal that is not the signal you want to send. This is too cheap a deal. Yep. You're giving too much away, and that's going to show that you're not a savvy founder. Yep. I'm not saying you have to price it incredibly the other way, but we've got to change these terms, because anyone who knows what they're talking about is going to be like, oh no, you're losing 30% of your round, 30% of your company the first round. Yeah. It's crazy. Yeah, it's too much. So mistakes made that way, but I also the other way I see. What mistakes do you see founders making repeatedly?
I would say I've seen a lot of founders build a product before actually doing customer discovery. They build what they think they want, and then they realize, like an example I can give you is someone who is in the food supply chain industry. They noticed that there was this huge pain point of communication between a supplier, a transporter, and then a store. And so they built this beautiful UI website, interface where you can communicate, and it looked really good until he realized when he went to customers that they are a text-based industry. That is the only way that they will communicate. And if you are trying to change their behavior, good luck. And so that was an example of you could have saved all that cost and time by just talking with your customers. And actually, I think the best way is to bring them in as design partners. So like really getting, customer discovery for the ones that seem very interested in what you're doing. Leverage that relationship and refine the product so that you can, one, have an early customer by the end of it, but then you also get an understanding of what they want, because the first product's never going to be the one and done. You're always going to continue to refine it. So I would say that's the biggest mistake I've seen a lot of founders do, is jumping the gun without actually doing the groundwork of understanding, is this something people will buy?
Yeah, I tell people all the time to talk to their customers, because it's going to open the door to, just information, refining the product, but also could be early sales.
Yeah.
Like having those conversations could literally lead to revenue.
Oh, yeah.
Right away.
Or it could even pivot it to another idea, which gets even more revenue and opportunities. So it's always best to do that. Yeah, I completely agree with you. Yes.
What results are you seeking from investments?
Yeah, I would say we typically underwrite investments to a venture scale outcome. We all hope that they become billion-dollar exits. We know that not all of them will be, but we try to see what's the market potential for it, and is it a large enough market for venture outcomes. I would say there's some investments, or not investments, some companies that don't need venture, that could be great businesses that could generate 10 million in ARR every year, but wouldn't be suitable for venture. And so really understanding what businesses are good for this type of investment. And so that's something that we look for in terms of outcomes. I would say venture, going into it, it is a J curve. So there's most of your portfolio will fail, despite as much support and help we try to, mitigate that. But it's really going to be a couple investments that are going to return the fund.
And how quickly can you sense the ones that are going to be outperforming?
So I would say it's early innings for us with our investments, but I would say it's the ones that are doing super well. They're hitting their targets faster than they expected, and they're raising around because it's driven by growth needs. And so they're getting customers in, and they need to hire more people to help really maximize and capitalize on their pipeline. And so those are ones where we see are doing really well and have oversubscribed rounds, or ones who are trying to get in, but then, there's a lot of investors that don't get in. And so those are ones that we see as breakouts that we get excited about, because you can just tell the founders focused solely on the business and just growing it. And so they're not focused on just optics of raising or wanting a flashy logo.
Do you see founders outperforming and still having a life? This is a real question.
It's a good question.
Yeah.
I think it's tough.
Yeah.
Just from my own experience of being a founder building a VC firm, I think you have to be more strategic with moments of having a life. Like a lot of the founders we see, they have families. So they make it work, which I'm always impressed by founders that have children and are able to run a company on top of that. And so I think it can be done. I think there's certain things unfortunately, that you have to trade off on to be able to do that. And so, I mean, for me, I usually have to give up doing a lot of like going out and seeing friends all the time. Like I'll try to strategically do FaceTimes, see my family on certain holidays, but other times I just have to keep building. And so it's just figuring out what is the best cadence for you to still get that fulfilling, need of your friendships, your family, and other interests that you have. But it'll probably be in a smaller dose than if you were just you're part of a larger corporation or part of a firm versus building a company.
Yeah, I don't know what I'd do if I had that kind of time. Like literally I worked, after one of the companies I was working for, a startup went under. I ended up going down to work at a bank, like not as a teller, working in corporate at a bank down on Wall Street. And I was like, 5:30, like people get out at 5. What? I just didn't even know what to do with my time.
Oh, yeah. That was me when I did grad school in London.
Yeah.
So the system over there is way different than in the US. Like you take classes and then you're done.
What?
Like there's no homework, there's no quizzes, tests. You literally have one exam or one final group project at the end of the semester, and that's it.
Wow.
So you literally have class, and then you have like your evenings or the rest of your day free. And I remember thinking, wow, I've never gone out on a Tuesday. Like, what do I do with myself? And so I completely agree with you on that. And I think also what we've noticed too with founders is, and even just anyone who's super passionate about what they're building and doing, you kind of almost have that monomaniacal sense of like, I'm obsessed with this and I want to do it. Like I feel like I always get a gravitational pull to just keep doing it.
Yeah.
So I would say I'm kind of in that bucket of like, I think a lot of us are workaholics, but we like our work. So, it just becomes part of, you enjoy it versus even the hard days, you enjoy it.
Yeah. It drives you.
Yeah.
Yeah. We talked about this a little bit in your response of how, founders have a life. But how do you tell us a little bit more about how you stay healthy mentally, physically, and emotionally?
Yeah, I would definitely say it's hard. I completely understand and empathize with founders and anyone doing their own business that it can sometimes be a lonely experience. It could also be an emotional roller coaster. I think, building daring ventures is a lot harder than D1 volleyball. Like, there's just so much ups and downs that I didn't anticipate with running a fund. Like one day you're feeling great. This is awesome. The next day you have brain fog. You feel like, oh, what am I doing with my life? What if this doesn't work?
Yeah.
And so I would say the things that I try to do to keep myself sane is I love working out. That's something for me. It just takes my mind off of things. I usually like to lift weights. You can't think about anything else because you don't want to drop the weights on yourself. So it's a good forcing function.
Yeah.
And then I would say taking walks. That's something that, especially when it's warmer outside, I love just taking a 10-minute walk, getting out of the office, because sometimes I can get so zoned in that I forget to take a break.
Yeah.
And so that's something that's been nice, just getting outside. And then I would say FaceTiming with my niece and nephew.
Yeah.
I get little moments of it, but they're like dopamine hits because they're just so cute. They're so young and they just are so new to the world. And so it's kind of also similar with puppies. People will just look at them and you just smile.
Yeah.
And so
it releases good chemicals in your brain.
Yeah. So if you looked at my Instagram feed or my algorithm, it's literally all either cute little babies or it's golden retriever puppies doing weird videos.
Yeah. I was a neuropsych undergrad, pre-med, actually.
Nice.
Not becoming a doctor because I would not have been a good doctor is what I decided. But I can't remember if it's dopamine or oxytocin or both. It's just these
Probably
things.
a little bit of both. Yeah.
Literally petting a dog for 10 seconds.
Oh, yeah.
Makes you feel so much better.
Yeah.
If you like dogs. Like dogs and are not allergic. But another thing about the whole kid thing is I had a kid when I started one of my companies. I think I was incepting, it was an inception of the kid and the idea of the company at the same time. And she's wonderful. She's healthy. But they force you to be present.
Yeah.
So I believe that many founders out there, that is their time to be present, and they can't necessarily, most people can't, be multitasking
Yeah.
when there's a 2-year-old demanding their time.
Oh, yeah.
Yeah.
Yeah, I completely agree with that. And whenever I would go out to visit my niece out in LA with my sister, the times where I was there, I remember I've actually told my mom this when she was visiting too. This is the one time I feel completely focused and present. I don't know why, but it just really is. You just get wrapped up in this new baby in the world. And so and they're just figuring out stuff for the first time. And so it's just pure joy. So I completely agree with you on that. There's something magical about it, and I can't put my finger on it, but it's really nice. And so that's one way that it keeps me balanced with the highs and lows of starting something.
And in terms of the whole working out thing, like I work out as well, but I think that for founders out there, you also have to figure out what works for you at the time.
Yeah.
Because I literally had to switch from running half marathons to a box, like a CrossFit box for a while, doing burpees, because when I was running, I was just ruminating over my business. And it wasn't helping. But doing burpees, I couldn't think about anything except like not...
just breathing.
Yeah. Not keeping my nose from the floor, like, keeping myself alive.
Yep.
Literally. And so that was a way to completely unplug from my business.
Yeah.
Yeah. So you've got to find out whatever works for you. For me, at times it's been surfing. I know some people who ski because they can't be thinking about their business while they're, going down a slope.
Yeah, you need a really strong distraction that takes your mind off of it. Yes.
Literally. Do you have any hot takes on the industry?
I would say a big hot take I have is I think the next wave of founders are going to look very different from what we've seen before. A lot of prior founders and, technology innovation booms, like, were very technical driven. So you think of like the, Bill Gates, the Mark Zuckerbergs of the world, a lot of that moat that they had was around technical chops, knowing how to build something. And I think the next wave of founders, because when you look at Gen AI, it's really changed how we work, who can build. Yeah. I've even learned to vibe code. And now anyone who has an idea or a problem that they want to solve can build at least like an MVP, or they can build something more cost effectively than they could in the past. So I think founders that are, and we call them buyer builders, they're buyers first that are now building something for the problem that they've experienced, for customers that they know really well, that they've worked with for, years. And so I think you'll see a lot more diversification of founder backgrounds. And I think that's really exciting because I think the technical part, while it still is important, it's not the front and center focus anymore.
What I see is it's easier to build. Yeah. But getting people on whatever you're building seems to be like, some people forget about that.
Oh, yeah.
And so to our conversation earlier, like building an MVP in Lovable or Replit or whatever you're working with, then go show that to potential customers and get feedback.
Yeah.
Like that is so important.
Oh, yeah. Yeah.
Because,
one
of the most important thing.
Yeah. One of the things we say now too, it's not who can build. Yeah. It's who knows what to build at this point.
And how to get, and again, for me, I think it's how to get adoption, because there's also like a race to the best tool isn't always going to be the one that wins.
No, it's the one that's going to have the customer adoption, high switching costs, and trust. A lot of where we've seen success with our companies are founders that have that trust with the customers that they're selling to, because they are one of them. And so I think that's going to become more of a moat. It's also a barrier to entry. But if you are a founder that has those, it's going to be your best competitive advantage.
Yeah, that's wonderful. And I see a lot of people doing things that don't scale to get adoption, to learn how to get to things that scale. Because again, it's getting people on there, getting the stickiness of the platform or whatever the tool is.
Oh, yeah.
So they don't leave.
Yeah, exactly.
Because otherwise it's just too easy to flit between all the tools out there. You mentioned you asked founders what their favorite book is or what the best book is that they're reading. Do you have something that you want to mention here, or am I putting you too much on the spot?
Ooh, that's a good question. I would say there's one that my co-GP actually recommended to me, and it's called Bullshit Jobs.
Oh.
And it's pretty entertaining. It talks about like 5 different categories of job types and who fills them, why they've evolved to roles that we still have today. And it's just fascinating to kind of see beyond what we typically think of as, oh, every job is really important and we need to have all these.
Yeah.
That's not necessarily always the case, but then it really is. If you've ever worked in a large corporation, you'll appreciate it, because you'll read it and just be like, oh, I know that person. Like, I really do. And so it's an interesting take on careers and corporate structure. And so, and it's amusing. It's written really well. So I would recommend that book.
All right. I put you on the spot that I'm gonna look for it. Anything else you want to cover in our conversation?
I would just say, for anyone who's interested in fund investing or building a fund, talk to a lot of fund managers first. Similar to founders with their customers. Yeah. Talk with a lot of fund managers and really understand what goes into it, because being a fund manager is very different than being an investor. You spend, I would say, probably 20% of your time actually investing. Yeah. And the rest is on the unsexy, boring stuff, paying bills, logging things, emails. So make sure you get a lot of different perspectives and see if it's something you really want to do, because you got to love it, because there's a lot of parts of it that are hard and not fun. And so that would be my advice for anyone who is interested in doing a similar path.
Yeah, I think that's brilliant. And then if you still want to do it, do it.
Then do it. And then that way you have a baked in group of people you can lean on to help you, because that's been something really nice to see, is that this new generation of emerging managers, we're all trying to help each other out because we're all in the same boat. You know, it's a huge barrier to entry to even be able to successfully raise a fund. And so we all need to help each other. It's like similar when I did organic chemistry. We're all just trying to help each other when going to study sessions. So,
organic
shared
chemistry
pain.
Killed me. Like, that's why I did not become that's not the only reason I didn't become a doctor, but I was like, no, thank you.
It's tough. It is tough. I had to do it in a summer course. So I did a whole year in 2 months.
Yeah.
I don't recommend.
I really appreciate you coming in today.
Yeah, thanks so much for having me on.
Yeah, this really helps founders who are out there potentially fundraising, but also people who are thinking about becoming fund managers understand a little bit more about what it takes.
Yeah.
And so, what we try to do is just pull back the curtain, give an inside look, and help people figure out, what the next best step is for them.
Yeah. And if anyone ever has any questions, feel free to cold outreach me on LinkedIn. I try to respond as much as I can. So
nice.
Happy to answer any questions.
Excellent. I'm Helena Fogarty, and this was Inside the Fund.